Let's start off with Shanghai, where we're seeing 4 days now with no community transmission. When we talk about the winding back of restrictions, though, there's still a lot of restrictions. We're talking about, needing people being limited to exiting their compounds with building passes. Lots of limitations on movement still.
This is going to be a long process, Heidi. The government is saying they're trying to get back to something more akin to normal by the end or the middle of June. So we're about a month off of that period. So very initial stages right now. Some of our colleagues in Shanghai, they got passes to leave their compounds, some for the first time in 2 months. But when you leave the compound, you can't get a car. You have to either go by foot or you get a bike. And you can only leave for about 4 hours at a time and maybe once every other day. And the only thing that's open when they go out are grocery stores. And when you get to the grocery store, you got to stand in line because there's lots of other people trying to get their goods as well.
Oh, wow. Still, we, of course, have seen so much market turbulence because of those lockdowns and perhaps a little bit more risk on sentiment, given that we are expecting some of those restrictions to be eased. But Chinese authorities are already taking action. They have stopped reporting bond trades by foreigners. What do we know?
So what we know is that in the last couple of months, there have been foreign investors have been selling off their holdings of Chinese bonds. We actually overnight got the data for the month of April, which showed that we have had sell-off by foreign investors, overseas investors, for 3 consecutive months. That will be the longest stretch since 2015. What we have not been getting is the daily transaction data for overseas investors. So we don't know on a daily basis what those holders are doing with their bonds. Although I think the suspicion and the expectation is that they are selling off, there's more capital leaving the country because of the economic situation here. And even though the markets are starting to firm up because people are saying, well, maybe we've hit a bottom and things will start to get better from here, there's a lot of uncertainty still, especially around COVID, because with Omicron being so transmissible, there's always a possibility of additional lockdowns coming down the pipe.
Right, and it's that fear, that sort of viewing Shanghai as a cautionary tale that's really in play for Beijingers, right, where you are. What are we seeing when it comes to the trend that cases show and the potential for more restrictions?
So Beijing's had an increase in cases today. It's not been a substantial, huge increase. So far, the restrictions that much of Beijing is under pales in comparison to what our folks in Shanghai have gone through. We can still leave our apartments, we can leave our compounds, but when you go outside, there's a dearth of taxis and cars. Most stores are closed. The only things that are open right now are grocery stores and hospitals and drugstores. Public venues are largely off limits. There is testing every single day. The big uncertainty is how long Beijing will remain in this situation of sort of animated stasis and what the impact on the economy will be.